This is a problem that is very tedious, that you really have to pay attention to detail, and you definitely don't want to wait to do this one the night it's due. And of course, you don't want to attempt this one until you have carefully studied the chapter. This one is time consuming. So here it is. Faith Brooks, a 28-year-old college graduate, never took a personal finance class. She pays her bills on time, has managed to save a little in a mutual fund, and with the help of an inheritance managed a down payment on a condominium. But Faith worries about her financial situation. Given the following information, and when you see a little icon there, this is from my finance lab, you click on that and it gives you the information. Okay, it might be a good idea to print that out. Also note to the right that you've got to scroll down to get all of it. Okay, anyway, there's the information. You click on that icon, and that's what we see right in front of us. This is what you see when you click on that icon. All this. I know, I know. Don't. That's why you don't wait till the last night. Okay, don't do this to yourself. Get started on these things early. Anyway, that's the information given to us. So anyway, let's continue on. It just says using this information, calculate. Well, first of all, we've got to prepare her balance sheet and income statement. That's the first step. Now, obviously, you're going to have to write this down, like I said in the previous video on the savings ratio and debt ratio. I emphasize that you've got to get out some paper and you got to take some time. You try to do this in your head, and it's going to be very difficult. So, write it down. And here we go. I've written it all down. So, we've got to do an income statement, a balance sheet, and then from those statements, calculate some ratios. So here we go. Step number 1. We've got to figure out what these things are. Do they go on the balance sheet? Do they go on the income statement? What's going on here? Well, let's take it one at a time. Visa bill. Okay, $356. Well, that is a liability, right? I'll put an L here. It's a liability. She owes that money. Stocks. 5502. Stocks. Well, that's an asset. Something she owns. Okay, so we're looking. The items here are either going to be income or expenses. That's the income statement, right? Or they're going to be, if balance sheet items, assets and liabilities. Okay, so we've got to identify what these things are so we can put together our income statement and our balance sheet. All right, MasterCard bill. Well, there's another liability. We owe that. She owes that. Monthly paycheck, net. Okay, so net of taxes. This is take-home pay. Well, that's a revenue, or we'll call it income. Okay, put a little I there. There's an income item. I think it's the only one. Annual medical expenses. Well, that's an expense. Okay, so if it's money coming in, it's income. If it's money going out, it's an expense. If it's something you own, it's an asset. If it's something you owe, it's a liability. Okay? Mortgage payment. You're paying that every month. It's money going out. That's an expense. Temple Mutual Fund. Well, there's an investment, an asset, something you own, or she owns. Okay? We've got a 401k retirement account. There's another asset. Car payment every month. Okay, well, That's every month. That's money going out. Expense. Monthly utilities. An expense. A savings account. She owns that money. It's sitting there in an account. That is an asset. Clothing expenses every month. That is an expense. And checking account. More money she has sitting there. An asset. Quarterly insurance, not due. Okay, the not due part is important because if any part of it is due, that's a liability. The part that's due right now is a liability. Well, she's all paid up, and so we need to know that amount for our income statement. That's how much she pays every quarter. So since it's all paid up, no part of it's going to be a liability. It's all expense. They're trying to simplify things there for us. Coin collection. There's an asset. Condominium, another asset. Food, spend every month. There's an expense. And an automobile, that's worth $9,200. There's an asset. Furnishings, an asset. Outstanding mortgage. She owes that money. That's a liability. Auto loan outstanding. That's how much she owes on her car. Liability. Other personal property. Asset. And other monthly expenses. Miscellaneous stuff. There's an expense.